Welcome to the Growth Shift. I'm David Zylstra. Here's what I've learned after years in business. Every leader who's built something meaningful has a story, but the moment they had to shift, when failure forced innovation, when change became opportunity, when they chose growth over comfort. On this show, we dive into those pivotal moments, the setbacks that became breakthroughs, the strategic shifts that accelerated growth, and the frameworks that turn obstacles into opportunities. Because here's the truth. In a world where change is the only constant, the leaders who thrive aren't the ones who avoid failure. They're the ones who've learned to shift strategically through it. So whether you're facing your own pivot point or just want to learn from someone who's been there, you're in the right place. Let's dive in. Today, I am thrilled to welcome Sean Bourgeois, a true innovator in the insurance technology space. Sean is the founder and CEO of Fuse, a company building what's been described as the Bloomberg Terminal for the commercial insurance industry. Prior to Fuse, Sean founded Tremor Technologies, a groundbreaking platform for reinsurance pricing that he successfully led to acquisition in 2023. With over 25 years of experience spanning tech and insurance, Sean brings a unique perspective on how AI is reshaping this traditionally conservative industry. Sean, it's great to have you on the show.
Thanks for having me, David.
Pleasure. Now, you've had quite the journey in InsurTech, founding Tremor Technologies and now Fuse. Could you share a bit about what you're building with Fuse and how it aims to transform commercial insurance?
Yeah, Fuse, it really is a Bloomberg terminal for commercial insurance. And what I mean by that is sort of like if you imagine a corporate bond trader pre-Bloomberg, the way they would transact, because corporate bonds aren't priced every night, they're relatively liquid, most of them, you'd have to find a counterparty, you'd have to discuss price and terms, you'd have to sort of find the right tenor of bonds and so on. And it was a lot of calls and emails and faxes in those days. Post Bloomberg, most of that tactical work is done right on the desktop, which means I can access anyone that I want in the market at any time. So full democratized access to the market. I can message them instantly. I have data at my fingertips to help inform who I should be speaking with. And then eventually I can transact as well, as Bloomberg today is one of the largest transaction platforms in the world. We see a similar path in the commercial insurance market. Commercial insurance brokers kind of have the pre-Bloomberg corporate bond job right now. All of them are frustrated to move things faster and incorporate more technology to move things faster. Fuse is trying to do that.
So what really inspired you to transition and jump right in from your previous company and successful exit with Tremor to tackling this new challenge in the commercial space that you identified?
Yeah, so Tremor was a great experience, and I think we made a nice dent in the universe in the reinsurance world with a modern pricing tool. But because reinsurance, it generally, for the most part, is quite episodic in trading, quarterly at best, we'd have to kind of gather the market, re-educate everyone, transact, and then everyone would go away for a month or two, and then we'd have to do that again. So after Fuse, we exited Fuse in 2023. After that, I decided to find, an application where you could have a persistent marketplace. It's like an always-on marketplace that people were always interacting. I think at the time I was thinking if you can bring that to life, that offers up so many more options than we were able to offer at Tremor. So that was sort of the birth of the idea of Fuse. Where in the market is best place for that? And that's obviously higher transaction volume, but not necessarily a small commercial BOP policies that it can be auto-rated. It's also not multi-million-dollar policies that can have 10 people assigned to them and it can be totally white glove. It's kind of everything in the middle. So that's the part of the market we're focused on and looking to build that sort of persistent market experience.
And is this something that you identified when you were with Tremor, or is it something that came, once you had a little bit more mental space after you sold the company?
Yeah, well, there's a sliver of the reinsurance market that's called the facultative market relative to the treaty market, which is the bigger part. The facultative reinsurance market is effectively individual risk placement, so higher transaction volume. And we talked a lot to facultative market participants, sort of the pains and so on. But the market was just a little bit too small for us to shift and address and build technology specifically for. However, that idea of, okay, if you can get a higher transaction volume market, we can bring in all kinds of tools that Tremor is not able to bring in.
Mm. So it sounds like maybe this is something that you kind of just wished you could have had with Tremor. It's just that there wasn't really enough volume in the market or enough transactions to make it happen. Didn't make enough sense of it.
In a way, I mean, I would say it's a distant cousin of Tremor. It's not really something we wanted to have at Tremor or could have had at Tremor. It was more of, how can we apply marketplace technology somewhere where it can be more persistent in a different ways? So we're not involved today with price discovery, for example. That sort of technology is not something we're focused on. So it's not so much something that we wished we had. It was something we really knew we couldn't have, but it'd be exciting to chase down this opportunity in the right part of the market.
You mentioned Fuse is sort of like a distant cousin of Tremor, right? Now, with what you were doing at Tremor when you were building it, would you say it contributed in a large way to your product development and market strategy at Fuse?
A little bit in some ways. I mean, I think there are, as any entrepreneur, there are lessons learned as you build technology and bring it to market, bring it to life. And you learn certain things work better than expected, many things work worse than expected, and you kind of adjust. And we went through that process. I went through that process with Tremor, and Fuse, I think, is capitalizing on some of the areas of the market and sort of maybe not, I wouldn't say missteps, but where we could have done things a little bit differently that I think would have been more successful, we're able to do going forward with Fuse.
Okay, so maybe just reiterate on some of the things that you were working on in a different way. Now, when you moved to Fuse, it sounds like you've got a broader opportunity in a niche market than you did initially with Tremor. And you obviously led your first company, or you led Tremor, we should say, to a successful exit. Now, you knew what need you were going to serve. You knew how you wanted to serve it. You had a pretty good vision and pretty good idea of how to deliver the product and the market strategy, it sounds like, but that doesn't eliminate all risks when starting a new company. What sort of challenges were you really up against with Fuse when you started?
Well, I think the biggest challenge, and honestly, I think most InsurTech entrepreneurs face this, is any type of behavior change that you're trying to make in a market that's been operating for hundreds of years, and mostly the same way, is hard to, even if it's a much better experience, it's still hard to kind of break that behavioral inertia. So that's the number one hardest thing to do. And the way we've sort of come at this is both our investor strategy and also our go-to-market strategy to make sure that we're incorporating both sides of the market on our cap table, operators that have problems that we are solving with technology, hopefully, and buy the vision, excited about it, and help us promote it. And then also to sort of have beachheads into the market and very specific components of the commercial insurance market where we can kind of have a localized, thick market, if you will, and get that functioning well, and then kind of do a few more of those, and hopefully then the kindling becomes a big flame.
Okay, and with on the side of maybe the go-to-market strategy that you mentioned, when you and I spoke the other day, you also mentioned that getting your first 100 beta users was pretty challenging, and it involved a lot of cold outreach. It took some time to really make that happen. Can you tell us a little bit about that journey that you went through?
Yeah, and a lot of people look at Slack today, for example, a fairly ubiquitous communication tool, and it feels like it was an instant success, an overnight success. But really, the early days of Slack, even though it was sort of obvious, quote unquote, to developers within teams that if they could communicate this way, things could move faster and better, and you have better track record. Until they really saw it and were walked through it sort of step by step, the initial traction took a long time for Slack to achieve. But once it did, it took off like a rocket. But it took a while to get started. And we're seeing the same thing here, where we have to sit down, educate both sides of the market, particularly brokers, how this is going to make their lifestyle so much better, and to start to build small pilots around that, bring the other side of the market, and start to sort of have the two working together. And then you kind of go from there. So that's the general overall idea.
Okay. Well, you mentioned a few minutes ago as well that, it's been difficult to break into a segment of the industry because of how slow moving it's been and, traditional things that people will have done and maybe resistance to change. Would you explain or would you say that's one of the reasons perhaps why, acquiring your first 100 beta users was difficult, or was it something else?
Yeah, I think that's most of it. And honestly, I think that's sort of the endurance hurdle that entrepreneurs have to be able to deal with and come over. It takes a long time in this market, in particular in this market, any market, honestly, but in this market in particular, it takes a long time to sort of change the hearts and minds and to get people excited about a new way of operating. So you have to kind of go into it knowing it's going to be a longer journey, but well worth it if you can do it right.
Absolutely. And do you think it's largely just like the awareness of the education aspect of it that was causing difficulty? Because it sounds like you guys are doing something, very unique at Fuse. So it also sounds like you're filling a very important need and solving a lot of problems. So with something so great, where do you think the disconnect really lies when it comes to communicating that value with brokers?
I think education is a big part of it, but it's not entirely that because what we're doing in many cases, if you kind of look at the technology, it's to most sort of reasonably tech savvy folks in the market, it's kind of obvious. Like, okay, would I rather send disparate text messages, emails, faxes in some cases across different teams, or would I rather have it all on one single dashboard, 7 conversations going simultaneously in real time, getting questions answered effectively in real time? That's an easy thing for people to visualize as being a better experience, but there's still the shifting of gears away from the traditional way of working into this way of working. So we have to kind of just slowly. It's a combination of education, getting people excited, giving them incentives to use the platform in terms of what they're going to get on the other side of it, and then you make your way.
Would you say the challenges are the same with brokers as they are with underwriters, or do you have to take a different approach to communicate?
So the way we're thinking about Fuse and how we'll be successful is if we can really convince brokers, especially brokers, mid-market brokers, that this technology will incredibly improve their lifestyle. It'll let them move much faster, have more time to focus on prospecting and doing new deals as opposed to kind of getting things organized so they're ready for placement, that sort of thing. So enabling them to be able to do that is the first part. So that's the demand side of the market for us. If we don't accomplish that, we're not going to get the supply side, which is the carriers and the underwriters. Carriers and the underwriters will all find when we talk to them, of course, they find what we're doing interesting. They're very curious. But if I were in their shoes, I would say the same thing, which is like, well, when you have risk available for us to have a look at, we'll invest a little more time and we'll integrate potentially with you and it'll be great. But first do that. So we have to make sure the brokers feel the value and bring the supply.
Do you think you've worked through those initial challenges of really being able to connect with a few quality partners in the beginning, or is this something that you're still trying to figure out?
Well, the way we look at it is sort of similar to what one of our inspiration companies called Symphony Communications did really well in the capital markets, and that is they didn't start out trying to do enterprise agreements with banks and brokers. They built a platform that was accessible on an individualized basis, where you could have sort of a freemium model, where you could log in, you could sign up, you could have free access and have reasonable value right away. And if you want to use the advanced features, you pay us a reasonable seat fee that's affordable and easy to digest as an individual. And then once you build up sort of that several thousand user base, that's much easier to go and have an enterprise discussion. Say, hey, this is what we're doing. We have 45 of your brokers using this all the time. They tell us they love it. Wouldn't it be great to have an administration layer in here so you could oversee what's happening, have full audit trail on all these conversations that are going on, and so on and so forth. I think then it becomes really attractive. But if we start with too many enterprise discussions, it'll end up kind of stuck in sort of technology committee, sort of a cul-de-sac, if you will. It's just very, very hard to get a carrier, which is in particular a carrier that's very large or a broker that's large and has embedded technology that they have to consider whenever anything new comes along. To get that's a really long sales cycle, and at the end of it, if we don't have the brokers, for example, then they're not gonna spend the time to integrate. So that's the dynamic.
So it sounds like maybe you're just targeting the brokers or the smaller brokers initially as a bit of a proof of concept or a use case, we could say, for the larger companies that ultimately will be worth your time. But right now, you can't show them that you're necessarily worth theirs.
Yeah, exactly. Yep. We got to convince those kind of second, third tier brokers that what we're building is just going to make their life so much better.
Doubt, and I'm sure it'll make their lives a lot better at large enterprises in a much more impactful way than with the smaller brokers as well. What sort of you know, can you tell me more, Sean, about what your plan is for Fuse over the next 12 to 18 months and how it is you plan on bridging the gap from smaller brokers to the second and third level brokers, as you mentioned?
Yeah, as we go to market, we'll continue to sort of scale up the individual user base, and as that grows, it'll give us more leverage to have enterprise discussions. The main goal is to get ourselves to a point where the data, the interaction, the messaging, the directory capabilities is in full use, and we can then begin to introduce electronic transactions, which is kind of ultimately where Bloomberg ended up, and is ultimately their by far largest business. So that is the goal: is to kind of build up a community, introduce transactions, so meaning last mile placement with integrations to carriers for mid-market commercial risk, and then begin to make that happen. And as that starts to happen, then we have sort of a full suite from start to finish that we can offer anyone tactically to do their entire job online.
Sounds like a lot of what you're doing is really dependent on the data that you can have access to and that data set that you can build.
So the data piece is interesting. So today we have a huge data lake of the NAIC, which is the National Association of Insurance Commissioners. Every insurance company in the United States has to file annual statements that are by line of business, by region, very detailed, biblical length documents. We have 5 years worth of all of that data in our own data lake that we enable really robust visualization. So you can imagine, please tell me who are the largest writers of commercial auto in the Southeast that have been growing at least this much with this little loss ratio deterioration, for example. You can answer questions like that. So that helps me as a broker to identify who are the carriers I should be talking to, and helps me to benchmark my client and what others are doing, and the other way around for carriers to be able to benchmark themselves and see, okay, where am I in the industry? So for both sides. But that's today. As we get to that point of being able to transact electronically, it gets even more interesting, because now you're talking about a proprietary data set in aggregate. We don't own anyone's data, but we just have a right to aggregate it for market level purposes. But then we can begin to expose pricing trends and so on that are maybe not real time, but kind of close to real time, which is a million times closer to real time than today, put it that way.
So it sounds like things will just be able to be accelerated in terms of how quickly it is you can accomplish these things, especially once you have more access to more data.
Yeah, I think so. I think more quickly, better actionable data at your fingertips with a higher level of compliance.
Now, you're dealing with an immense amount of data, as most insurance companies or InsurTech companies will. I would love to learn a little bit more about the AI side of things. But first, let's take a step back. I mean, when you founded Tremor, you ultimately led it to an acquisition in 2023. So in the last few years that you led that company, there was AI accessible, and it was becoming a little bit more intelligent, I suppose we could say. Then you started a new company right in the middle of the AI revolution, let's say, or at the beginning of it. How did your experience with each of those compare? Starting Tremor with little access to LLMs and what people are calling AI, and then starting Fuse with full access to it in a grander way.
So for Tremor, the technology that we built was really based around complex optimization math. And the computational power we had powering that math was what made the technologies really sing. Because of that, there wasn't really, even if we fast forwarded to today and the AI tooling is available, it wouldn't have really improved what we were doing at Tremor specifically. Now at Fuse, for example, we're using AI tooling in a variety of different ways, in addition to internally, but also just to help identify class appetite by individual based on information that's publicly available, like that kind of information, that kind of matching risk to capital a little bit better with appetite. That's an important thing. And what we're building in addition to that are things like, for our submission management service, things like, can you summarize a really complex treaty in a page? Can you compare last year's insurance policy in these 3 lines of business versus this year? So on and so forth. Those are really powerful. That's coming online in the next quarter or two, which will save tons of time for people using the system. And then lastly, market insights. So how am I doing relative to my peers? Determine what I'm buying, how much I'm paying, so on and so forth. That's also at the early stages of being accessible by the bigger models on the market. But as you know, I mean, every week it's getting better. So we see huge opportunity, particularly with what we're doing at Fuse.
That's excellent. Something else that you mentioned was just your ability to iterate faster as well, and just, move things faster and at an expedited rate. Where do you think you would be today without AI? Let's say it was removed from the equation. How much further behind would you be?
So, in terms of our internal tooling and how we use it, I don't know if we'd be further behind, but it would just take us a lot longer to get from ideation to prototype. Like we can now do that incredibly quickly for different really complex features and components that we want to build. So that helps tremendously. In terms of the business and the business model, I think we're still all in the earliest stages of using AI tooling practically in the insurance industry. So I don't think it's held that in not having had what we're building now has held us back. It's more about going faster with internal tooling.
Okay. If we look at AI across the industry as well, obviously you have some pretty deep insights and experience when it comes to tech and AI. What's your take on why perhaps smaller, more nimble companies might have an advantage in this space?
Yeah, I mean, as so-called kind of prompt engineering becomes a little more predominant, which is if you imagine, it's really how do you ask models questions in a rich way that can give you, really robust output. You don't have to be incredibly technical. You don't have to be incredibly deep with experience to get amazing results if you're able to prompt properly. And I think small companies can easily have teams. I think progressively more and more are that have this capability to understand how to interact with ChatGPT and Claude and all the major models with from all the major providers as they continue to get better and better, and be able to build their own internal applications and improve them very quickly, and then do amazing new things that nobody's thinking about today. You don't have to be a really large team. In fact, these tools help you to stay pretty small, which is fantastic. So smaller companies can have an advantage.
That's fantastic. So if we look at the opposite side of this as well, Sean, larger companies who are in a position to pursue maybe more grand AI initiatives also face the risk of many of those initiatives failing, right? There's a pretty high failure rate across the board with tech and AI, well, new tech and AI initiatives, let's say. How would you stay focused on creating solutions with tangible business value if you were pursuing a grand initiative yourself?
So it's interesting. I think that, there's been a few highly publicized sort of mega partnerships between very, very large insurance carriers and very well known, very large Silicon Valley so-called AI, not AI first, but AI underpinned companies. And those are fine. But if you ask any InsurTech entrepreneur that looks at the tech budget of the top even 100 carriers in the US and the amount of money that they're spending on mostly legacy tech, it's astounding. And how much you could do if you incorporated a sort of a much more innovative agenda with that kind of funding. So it's easy to say that, and I understand it's really hard to unwind that internally at large companies. So I think that the goal, I think that's unreasonable to ask them to unwind that, but the goal I think really should be that these larger carriers and brokers should be much more welcoming to the ecosystem of InsurTech companies that are doing things with millions of dollars that they need hundreds of millions of dollars to do. That doesn't necessarily mean investing in them directly or buying them, but that can be part of it. But surely it should be partnering with them instead of trying to build everything in-house and really monolithic technology stacks, which, by the way, is, again, very tempting because there are large technology teams that want to build things, right?
So perhaps rather than trying to build some new flashy product in-house or take on a big initiative with your team, maybe outsourcing some of that in a smaller way to test it as a proof of concept, see whether or not it works, how it works, and where the value is before deciding to invest a lot more towards it.
Yeah, and I think there's probably a short list of ideas that both sides of this market have in terms of how they think technology could help them. And I guarantee you there are dozens of startups that are working on those problems and solving them. So I think it's more about really just getting a real pulse on what's happening in InsurTech today. And I should also mention that InsurTech is often, it's sort of conflated with digitizing the old way of working. So like a digital MGA or a digital full stack insurer. Marginally should be better, right? But that's not InsurTech, right? That's just digitization. InsurTech is really profound, disruptive technologies that help the market move much more efficiently. And those, no one should fear. And if I were, in one of those chairs in one of these large companies, what I would want to do is just have a really, really good pulse on the hundreds of InsurTechs that are out there in the buckets that we think make sense for our business, and then interact with them and partner with them and perhaps buy them. Save yourself massive time and cost. I think that would be a great strategy.
Yeah, very sound approach. Test it and then buy it if it works, and make it better for yourself.
Yeah, absolutely.
What do you think is the most exciting for yourself about the future of AI in the insurance industry, maybe over the next 12 to 18 months, because who knows where it will be beyond that?
Yeah, I mean, I think that like AI broadly, there's sort of this sort of like fear, like the robots are coming from my job. And I get that. I get that in insurance. I get that outside of insurance. But I truly believe, I think what most of sort of the folks behind these AI first companies believe, which is it's just going to make you so much more productive. Like you're going to just have to focus on the most high value tasks, and everything else can be quasi automated. Not automated like old school automation, but with some actual, if you will, thought behind it. That you have a junior underwriter sitting next to you that happens to be a computer terminal doing a healthy amount of your underwriting, and you're just overseeing and supervising what that is doing. And then the highest value white glove stuff that you need to do, which won't go away, you can focus on only that. So it frees you up. I think that's the most exciting thing for me in the insurance market is seeing how that automation from AI comes to bear in terms of pricing risk and also deciding where that risk should be going to be priced. You can imagine a very exciting electronic marketplace intermediating that, and then saving everybody a lot of time to focus on the most important things in the market. I think that would be good for everybody.
Absolutely. I couldn't agree more. What sort of advice might you give to smaller insurance agencies or professionals who are hesitant to adopt AI, but maybe are also feeling like they don't want to be left behind?
I mean, I would say staff a junior person that's tech savvy and give them some guidance and some guide rails to follow in terms of which models to test and to work together on business cases and see what technology can improve for you. I think it's not more than one or two resources for most companies to be able to get tremendous results if they have a reasonably good person that's pretty good at prompt engineering. And you could effectively, if you were to continue to build some of the technologies that they were able to prototype, you could do so at a fraction of the cost that you used to have to even 5 years ago. So that's how I would go about it. I think it's kind of hard to ask senior people to kind of go back to school, people that are very polished industry people and they're really, really good at what they do, but to go back to AI school, yeah, I mean, I think everybody's curious. Everybody can pick up the basics, no problem. But I think it's much better just to have one or two people focus fully on that with guidance from business leadership.
Incredible. Very valuable insights, Sean. Thank you so much. For our listeners who might be interested in learning more about Fuse or connecting with you to continue the conversation, what's the best way to reach you?
Well, you can reach Fuse directly at fuserisk.com. You can sign up for free and check out the platform right now. You can reach me at Sean@fuserisk.com. I'm happy to get direct inquiries and talk about what we're doing with anybody in the market.
Thanks so much for joining us today, Sean.
My pleasure.
To the listeners, thank you for tuning into the podcast. As always, I hope this episode has brought you valuable insight, knowledge, and inspiration. If it did, please, would you show your support by dropping us a like on this video and subscribing to the channel. Until next time, we're signing off. And that's a wrap on another episode of The Growth Shift. If this conversation sparked something for you, whether it's a new perspective on failure, a strategy you want to try, or just the reminder that every setback can become a setup for something bigger, hit that subscribe button and share this with someone who needs to hear it. Remember, the leaders who thrive aren't the ones who avoid change. They're the ones who shift strategically through it. If you're ready to build the systems that help you grow without the chaos, head over to valentix.io. We help businesses like yours scale smarter, not harder. I'm David Zylstra, and I'll see you in the next shift.